Hello everyone, welcome back to our weekly webinar series. My name is Faiza Hashmi. I am the tax director here at Crest Cooper. Today we will be discussing the topic exempt persons. We will be discussing who are exempt persons for corporate tax law, what are the categories, what are the conditions for them to be treated as the exempt person, do they have any requirements to get this exemption, what are the registration requirements, what are the compliance requirements for them, if any, and what happens if they cease to be exempt person. So now, as always, once we finish our webinars, we are always getting requests from people that they want a recording of our webinar. So all our previous webinar and also this one, when we are done with the today's webinar, it will be available on our YouTube channel. Our handle is Crest Cooper. So if you want to view the recording of any of our previous lectures, we have completed 81 lectures. You can go to our YouTube channel and they will all be available there. And if you have any questions, feel free to email us at info@crestcooper.com. Now, coming back to the topic of today, exempt person. So now there are three types of persons under the corporate tax law, you can say. One is taxable person. Taxable persons are those people who are subject to corporate tax, or they can be either resident taxable person or non-resident taxable person. Then we have out of scope persons, those who are not in the ambit of corporate tax, who are outside the ambit of corporate tax law. So, for example, like natural persons that are not doing any business activity, or it can be like non-resident persons who do not have a PE in UAE or who are not earning any UAE source income, or they don't have a nexus in the UAE. Any transparent partnerships, funds, family foundations, foreign PE of a resident person if they have, opted out and do not want to include the income and expenses for city purposes. So all these people are out of scope people. And then we have exempt person. So exempt person, there are specific entities under the law who are given this exemption from the corporate tax. And some of those exemptions are automatic. Some of them you have to apply for. Some of them have conditions. And for some, there are no conditions for these exemptions. So we will be discussing that more in detail later on. So if we look at the larger, picture, so like we said that exempt persons are there, out of scope person, taxable person. Taxable persons are of two kinds, resident taxable person or non-resident taxable person. Now, resident taxable person, if it is a juridical person who is incorporated in the UAE, then they wherever they are controlled and managed from, but if they are incorporated under the laws of the UAE, they will be resident for UAE tax purposes, and their worldwide income, the UAE source income or the foreign source income, both will be subject to tax here in the UAE. If they are juridical person who are incorporated out of the UAE under foreign legislation, then if they are controlled and managed from the UAE, then only they will be considered as resident. And if they're considered as resident, they will have the same treatment as a juridical person who's incorporated in the UAE. That is that their worldwide income will be subject to tax. So the UAE source income and the foreign income both will be subject to tax here in the UAE. So if there's natural person, so if they do not conduct any business activity, like we just said, they're part of the out of scope person. But if they are conducting any business activity in the UAE, so wherever they're living around the world, the whatever business income that they're earning, and if it's crossing the threshold, they will be considered as resident, and that will be taxed here in the UAE. The non-resident taxable person, like we discussed, that non-resident who does not have a PE in the UAE, who is not driving state source income or does not have a nexus, is part of out-of-scope person. But those that do have a permanent establishment in the UAE, they will be considered as non-resident taxable person, and any income attributable to that PE here in the UAE, both the UAE source income, foreign source income will be subject to tax here in the UAE. So if they are driving state source income, then the UAE source income will be subject to tax. If they have a nexus in the UAE because of having, earning income from immovable property in the UAE, then they will also be taxed here in the UAE. So today we are not discussing the taxable person or the out of scope person, but we will be concentrating on those who are exempt person. So now under the corporate tax law, like we said, that certain people have been given this exemption or this enjoyment to be, exempt from this corporate tax. Who are those people? So there are these categories of people. So one is a government entity. So government entities are exempt from corporate tax. Government controlled entities who are doing mandated activities, they are also exempt from corporate tax. Then person who are engaged in extractive business, they are also exempt from corporate tax. Persons who are engaged in non-extractive natural resource business are also given this exemption. Then we have qualifying public benefit entities. We have qualifying investment funds. We have public or private pension or social security funds. We have other juridical persons who are incorporated in the UAE and they're wholly owned or controlled by an exempt person, meaning that by from any of the A to G, and they conduct any of the either they undertake part or whole of the activity of the that exempt person. They are engaged exclusively in holding assets or investing funds for the benefit of the exempt person, or they only carry out activities that are ancillary to those carried out by the exempt person. So all this category, and there might be some that might be later on determined by the cabinet, but at the moment these 8 categories are there who basically are treated exempt. Now some of these people have automatic exemption, some of them need approval, and we will discuss this more also in detail. So now, like we said, that would they get automatic exemption? Do they need to apply for exemption? Do they need to register? What will happen? So, for exempt person, like we discussed, let's break down these 8 categories and make it more concise. So the first one will include the government and government controlled entities together. Now, government and government controlled entities, they do not need to register. They have automatic exemption if they are not conducting any other business, if they're only involved in sovereign business or doing mandated activities, then they do not need to register for corporate tax. They have an automatic exemption. They don't need to apply for anything. Government entities, they don't need to have any condition. For government control entities, like I said, they need to be doing mandated activities. Again, the exemption is automatic for both of them. Now, the second category is extractive and non-extractive natural resource business. So for this category, again, they do not need to register. And if they're not conducting any other business activity, and if they're only, doing extractive business or non-extractive natural resource business. So in that case, also they have an automatic exemption. The only thing is that they need to satisfy the conditions. We will be discussing these conditions later in the slides. And also they have to notify the Ministry of Finance. Then we have qualifying public benefit entities. They need to register themselves and they need to apply for the exemption after they have registered themselves. Once FTA approves their application, then only they will be exempt. Then we have qualifying investment fund, pension, social security fund, or juridical person owned by the exempt person. So they also need to register themselves. They need to satisfy the conditions for each of these categories and apply to FTA for this exemption. And if their application is approved, if they're meeting the conditions, then only they will be exempt from this tax. So if you see over here, that the categories there, we have like the automatic exemption that is available. Then we have the automatic exemption, but notification needs to be done to the ministry in the case of extractive and not extractive. Then certain companies are giving the exemption under the cabinet decision, and if they do still need to apply for this, and the other categories where they need to meet the conditions under the law and also apply for this corporate tax exemption from FTA. Natural persons, if they're having business income of less than 1 million, then they are not required to register as well. So from this 1 million turnover, their wages or personal investment or personal real estate, which does not require a trade license, that is also going to be excluded. And if their other, business income, apart from that, is less than 1 million, still they do not need to register, and they will be, exempt from CT for that particular tax year. So if we talk about the registration requirement, like moving on from, who has an automatic exemption and who doesn't have an automatic exemption. Now we discussed about the government and government controlled entities that they might be doing only the sovereign activities or the mandated activities, or they might be doing other business activities as well. So if they are only purely doing the sovereign activities or the mandated activities, then they are not required to register and they have this automatic exemption. If they are doing the sovereign activity and doing some other business or business activities, under a trade license, then for that particular business, they will have to follow the normal timeline for the registration. So, for example, that if the business has been incorporated, let's say it's a newly incorporated business after March 1st, 2024, then they will need to register within 3 months of being incorporated. If they were incorporated, let's suppose before March 1st, for example, if they were registered in November, let's suppose 2023, then they are required to register by November 31st, 2024. If they are registered, they were incorporated in December 2023, they will be required to meet the deadline under FT decision number 3, and the deadline would be December 31st, 2024. So basically, they need to follow the normal timeline for business for those business activities. For the sovereign activities, they will be exempt. Then coming to extractive, non-extractive natural resource business, again, if the company is purely doing the extractive business or the non-extractive natural resource business, they do not require to register. They only need to notify the ministry, as we discussed in the previous slide. But if they are also involved in some other business apart from this extraction business, then for their other business, they will need to follow the normal timeline for business, just like we discussed for the government and government-controlled entities. The normal timeline under FT decision 3 would need to be followed by them. Now, then moving on to qualified public benefit entities, they are required to register first. And then if, the list of the qualified public benefit entities given under the cabinet decision, so if they are one of them, they need to register and also apply for the exemption if they're meeting the conditions as well, which we will be discussing later on. And their registration had started on 1st of October 2023. Then for others, the qualifying investment fund, the pension social fund. So if you discuss the qualifying investment fund, their registration started on 1st June. Again, they are required to register, then, ask for the exemption. Pension social security fund, again, registration had started on from 1st of June 2024. And these all categories of people, they require to first register themselves and then apply for the exemption with FTA. And only once FTA approves, they will get this exemption. They do not have automatic exemption. Only the government entities, government controlled entities, extractive and non-extractive natural resource business are the people with automatic exemption. But the extractive and non-extractive natural resource business do need to notify the ministry, and that is one condition for them. Now, moving on from the registration, there are other compliance requirements. So, of course, if somebody is registering, they might need to be, having some compliances as well. So let's discuss that now. If it's a government or government control activity, we discussed they're doing only sovereign activities, only mandated activities, then they are not required to register, and then they are not required to file any return or any statement or any declaration. So there is no requirement further for them. Now, if they are doing a mixed business, like a sovereign business and also, a normal business activity under a trade license, then the normal timeline we will be following for the registration, and then tax return will have to be submitted for each business. For if they have like 3-4 businesses and trade license for those businesses, they will need to file separate returns for those businesses. If they do apply to be treated as a single person for all the other business, then they will need to apply, submit only one return. Otherwise, they will need to submit a tax return for all businesses separately and within 9 months from the end of the tax year. Now, for extractive and non-extractive natural resource business, again, if they are only doing extractive and non-extractive natural resource business and nothing more than that, then they are not required to register. They do not have any requirement compliances to file any return or declaration or statement. But if they are doing mixed business, they are doing the extractive and non-extractive natural resource business and also doing other business activities, then normal timeline they will follow for registration, and they will need to file tax return for each of their business activities. Now, for qualified public benefit entities, they are required to register. For all these categories, the qualifying public benefit entities and qualifying investment fund, the pension social security fund, and other juridical person owned by the exempt person, they do not need to file a tax return, but they will be required to file an annual declaration. This will be submitted in the Imara tax portal, just like the return within 9 months from the end of the tax year. They will declare that they are still meeting the conditions for the exempt person, and FTA can ask for documentation, so they need to keep the documentation with them as well for 7 years, so that they can prove that they are still meeting the conditions for being exempt person. So if let's discuss the type of categories one by one. So the first one that we will discuss will be the government entities and government controlled entities. So government entities and government controlled entities, like we said, they could either be doing just their sovereign activities or mandated activities. They will be exempt from corporate tax. There's no condition for government entities, for government control entities. They just need to be doing the mandated activities that will be provided through a cabinet decision. For sovereign and business activities, if they're doing mixed under the license, some business activities as well. So for the sovereign activities would be the same treatment, but for business activity, they will be subject to tax. They need to prepare financials for their business, activities for the different business from, the government sovereign activities. They will be treated as this will be treated as an independent business. The business activities that they're doing through the trade license, they will calculate the taxable income. They will file their return for that, like we discussed earlier in the earlier slide. And any transaction between this business and the sovereign, business or the government, you can say, entity, that and their business, being run through a different trade license, those transactions between them would need to be at arm's length. They will be treated as they were being done, with related parties. So they will have to follow the transfer pricing and arm's length, requirements for that. Now, like we discussed before, that for all the businesses, they need to do this separately and treat them as separate, businesses. But they may apply to the authority to say that, we want all the businesses under the trade license to be treated as single taxable person just for administrative ease. And if they are meeting the conditions, then, FTA may allow them to do that. So why are the government entities and government control, entities exempt? So usually you will see under most of the tax laws of different jurisdictions, government entities and government control entities are always given this exemption from tax, and mostly because, there is a strong public interest and policy justification for this, giving this exemption, since they are, doing a public function for the benefit of the country. So they are exempt because they are extension of the government's sovereign and public functions. Now, government control entity is a juridical person who is directly or indirectly owned and controlled by a government entity. Who are government entities? Well, government entities are like federal government, local government, government departments, government agencies, authorities, and public institutions of the federal government or the local government. And business activity, like we said, that is apart, away from the sovereign activity or the mandated activity, that needs to be conducted through a trade license to be in the scope for corporate tax. So if they are doing a business through a trade license, and registered with the licensing authority, then that would be subject to corporate tax. And they cannot, like we said, the transactions between both will be treated as arm's length, but losses of one, the sovereign activities cannot be, reducing the taxable income of the other businesses. So they will not be, adjusted like that. So the next category we have is extractive and non-extractive natural resource business. So what is extractive business and what is non-extractive natural resource business? So extractive business includes the activity of exploring, extracting, removing, or otherwise producing and exploiting the natural resources of the UAE. So this is like the upstream business, like we say. And for non-extractive natural resource business, it contains the activities of separating, treating, refining, processing, storing, transporting, marketing. So any share of the income earned by the above business shall not be applicable to corporate tax, and it will be subject to tax at the Emirates level. So non-extractive natural resource business, like we discussed, extractive business is like the upstream business, non-extractive natural resource business is the downstream or the midstream, you can say, business of the natural resources. And so any share of income that is earned by this business, it will not be subject to corporate tax. It will be exempt, but there are some conditions, like they need to be taxed at Emirate levels. They need to have a right in a concession or license from the local government to undertake such business in that respective Emirates. So once they're meeting the conditions, they are exempt. So if to give you an overview of that, let's suppose for the extractive and non-extractive natural resource business, if they are doing only extractive and non-extractive natural resource business, then extractive business will be exempt if they are meeting the three conditions. What are the three conditions? That the person directly or indirectly holds or has an interest in a right, concession, or license issued by a local government. They are subject to tax at Emirates level. That is why they are being exempt from corporate tax, and they have notified to the ministry. Like we discussed, that is one of the conditions for them to get this exemption, automatic exemption. So if they're meeting these three conditions and they're doing extractive business, so then they will be getting this benefit and being exempt from corporate tax. Now, for non-extractive natural resource business, they will be exempt from corporate tax if they satisfy the four conditions. What are the four conditions? So, the person directly or indirectly holds or has an interest in the right concession or license issued by the local government. It is the same condition for the extractive business. The second condition is also the same. They have to be subject to tax at Emirates level. They also have to notify to the ministry, just like the extractive business condition, but they have a fourth condition, which is that the income is derived solely from persons that undertake a business or business activity. So this fourth condition is only applicable to non-extractive natural resource business. If they are meeting all these conditions, they will be exempt from corporate tax. Now, if they are doing a mixed business, they are doing extractive and non-extractive natural resource business and other business activity under the license, then the extractive and non-extractive natural resource business, that will only be subject to tax at Emirate level, then corporate tax will not be applicable on them. Like we just said, that they will be exempt from the corporate tax. But any other business activity that they are doing, which will, under the license, that will be in the scope of corporate tax, and they will be subject to the tax in the UAE. They will need to prepare their financials. That the business will be treated as independent business. Only there's one condition, that if it's an ancillary business and the revenue from it is not more than 5% of the total revenue of the period, then it can be considered the same as the extractive business. Otherwise, it would be treated as independent business. They have to calculate the taxable income, file the return, apportion the expenses, between the two businesses, and they cannot adjust, like we discussed in the previous slide, any losses from one to the other category, from the extractive to the other business category. And again, the transactions between these divisions, they will be treated as transactions with the related parties, and they need to be at arm's length. The only condition is if they are both exempt, then it will not be applicable. Otherwise, they will be treated as related parties, and they will need to meet the arm's length condition and transfer pricing rules. So just to summarize again, persons shall not be considered to drive income from any other business where such business is ancillary or incidental to the person's extractive, non-extractive business, and the revenue of such business in the tax period does not exceed 5% of the total revenue of that person in the same tax period. Like we discussed, then they will not be considered to be driving income from any other business. This will be part of the extractive and non-extractive if it is under this threshold. Any common expense that is shared between the extractive business and the other business of the person, and needs to be apportioned, like we discussed, in proportion to their revenue in the tax period, unless any other specified method is given. A person shall be considered effectively subject to tax under the legislation of the emirate for this purpose if the local government has imposed some other emirates level tax on them, for example, a royalty or revenue tax or any other form of tax, charge or levy in respect of such person's extractive business. The exemption under this article shall not apply to contractors, subcontractors, suppliers, or any other person used or contemplated to be used in any part of the performance of the extractive business that does not in its own right meet the condition to be exempt. So here, this condition is that the contractors, subcontractors, or suppliers that are used by the extractive or non-extractive natural resource business, because that's a normal, business thing to use in the extractive non-extractive business, that they are oftentimes using contractors or subcontractors or other suppliers. So they do not automatically get the extension of exemption just by being involved with them. They can be exempt person if they are meeting those conditions in their own right, but not merely by being contracted from an extracted or non-extracted person. So these contractors, subcontractors will be treated separately in their own right. The next category that we have is qualifying public benefit entity. So like an organization which is formed by private individual or government or non-government bodies for carrying out any charitable, social, cultural, religious, or other public benefit activities. So this organization, they'll be called qualifying public benefit entities, and they do not have a motive of making profit for distribution. So they are, serving the public and therefore the benefit of the public. So for example, like the Emirates Cancer Society or the UAE Deaf Association. So this is usually done to be, charitable or to help with the social or cultural, activities. So these entities will be exempt from corporate tax if they are carried out, if they carry out any of the above activity in relation to the welfare of the public, provided that they are meeting all the conditions for exemption throughout the period. It is mandatory that this entity should not be conducting a business except for what is required for the main purpose. Now, these qualifying public benefit entities, there have been there's a list that came out in the Cabinet Decision 37 of 2023, and they have been named there. So, if specifically the name of the public benefit entity is not there, then they are not part of the qualifying public benefit entity for corporate tax purpose. So, it is a very a vast document it has 521 qualifying public benefit entities stated over there. There are federal entities, some are emirate level entities. So you can see this breakup over here. There are 198 are federal entities and emirate level entities, 323. So they have been specifically named here. So if they are, over there, then only they will be treated as qualifying public benefit entity. Now, qualifying public benefit entity, like we said, they have to meet certain conditions also apart from that. So, what are the conditions for them to be included in this list? The condition that they need to be met is that they have to be established and operated for any of the following reasons. Now, they have to be either be exclusively for religious, charitable, scientific, artistic, cultural, athletic, educational, healthcare, environmental, humanitarian, animal protection, or other similar purposes. So they should be established for one of these purposes. As a professional entity, chamber of commerce, or a similar entity operating exclusively for the promotion of social welfare or public benefit. So it has to be one of these. Then the second condition is it does not conduct a business or business activity, like we said, except for those activities that directly relate to or are aimed at fulfilling their main purpose. So they should only be conducting those activity and not any other activity. Their income and assets are used exclusively in the furtherance of the purpose for which it was established and for the payment of any associated necessary and reasonable expenditure incurred. That's also another condition. Then the fourth condition is that no part of its income or asset is payable to or otherwise available for the personal benefit of any shareholder, member, trustee, founder, or settler that is not itself a public benefit entity, government entity, or government controlled entity. So no personal benefit should be given to any shareholder or member or trustee. That is also one of the conditions. And there might be more conditions later on that might come through a cabinet decision. So the public benefit entity has to meet all of these four conditions and any conditions which will come later to be able to be exempt from corporate tax. The next category of the exempt person is qualifying investment fund. So what is qualifying investment fund? So a juridical person whose primary purpose and activity is to pool investor funds and invest such fund in various sectors. Examples for the qualifying investment fund is like called REIT, mutual funds, private equity funds. So the core objective of the investment fund is to earn the profit for the investor. The main activity of the investment fund is acquisition, holding, management, or disposal of the investments. Investment funds have to apply to FTA like we discussed in the earlier slide. They do not get automatic exemption. So if all the conditions that have been prescribed are being met, so then FTA will allow them to have this exemption. Now, free zone based qualifying investment fund, if it's also meeting the conditions, can also apply to FTA to be exempt from corporate tax. Now, what are the conditions that we keep talking about? The conditions are given in Article 10. An investment fund may apply to the authority to be exempt from corporate tax if they are meeting the following conditions. What are the conditions? The investment fund or the investment fund manager is subject to regulatory oversight of a competent authority in the state or a foreign competent authority recognized for the purpose of this article. The second condition is that interests in the investment fund are traded on a recognized stock exchange or are marketed and made available sufficiently widely to investors. The main or principal purpose of the investment fund is not to avoid the corporate tax, and there might be any other condition later on from the cabinet decision. So just to summarize, who are juridical person. So this can help you navigate if the qualifying investment fund is going to be exempt or not. So if it is an investment fund and juridical person, if they are if it's not a juridical person, an incorporated partnership, partnership itself is not subject to tax, then there is no difference between the individual and the partnership. it will be treated like unincorporated partnership. But if it is a juridical person, it is satisfying the common conditions. What are the common conditions we just discussed in the previous slide? There needs to be regulatory oversight. They need to be traded on the recognized stock exchange or available to the investors. It is not made for the purpose to avoid the corporate tax. So if they are meeting these conditions, then if they're not meeting these conditions, then automatically they will be treated as a normal juridical person. They will have to meet all the conditions for corporate tax. They will be in the ambit of corporate tax. But if they are satisfying the condition, then we have to see, is it a real estate investment fund or it's a non-real estate investment fund? If the answer is no, then we have to check that are they satisfying the condition of Article 2 of the cabinet decision. If they are not satisfying the condition, they will be treated again like a normal juridical person. Now, what are these conditions in the Article 2? So this should be the primary business of the fund. The investors, if they are less than 10, then they cannot own more than 30% of the ownership. If the investors are more than 10, they cannot own more than 50%. They have to own less than that. It has to be managed by an investment manager and 3 investment professionals, and the investors should not be involved in the daily management. If they are meeting these conditions, then they can apply to FTA, and if FTA approves it, they will be qualifying investment fund and can be exempt from corporate tax. Now, if they were real estate investment fund, then we will have to check that if they are also satisfying the condition of Article 3 of the Cabinet Decision 81. What are those conditions? That the portfolio should not exceed 100 million. 20% of the share capital should be on the recognized stock exchange or owned by at least two institutional investors, which are not related party to each other. And we should have 70% average REIT, which is the real estate asset percentage. So if you are meeting these conditions, then they can apply to FTA to get this approval. And if they are approved by FTA, then they will be treated as qualifying investment fund and they will be exempt from corporate tax. The next category that we have is pension and social security funds. So public pension funds and social security funds, they are typically sponsored or governed by federal or local government. And because, they are for the benefit of the public, that is why they're given this exemption, and they can apply to FTA and to get exempt from corporate tax, but they do need to make an application and get this approval. Once they get approved, they will be exempt from corporate tax from beginning of the tax period, which is, specified in the application or any other date if FTA determines that to be correct. Now, for a private pension fund, what is a private pension fund? It is a fund created to manage pension contributions and provide payments to retired natural person above a defined retirement age. So a lot of companies have these private pension funds. They also have private social security funds, which are funds which are created by the private employers for the purpose of providing statutory end of the service gratuity payments to employees. So usually in companies, you will see that there are these funds. So they want to, be given some benefit as well. The benefit, the same exempt person status is also available to certain private and pension or social security funds, but they have to meet the relevant conditions and they need to apply to FTA, so they do not get automatic exemption. So now to be eligible for the exemption, these private pension funds or social security funds, they need to be subject to regulatory oversight of the competent authority in the UAE. They must have a pool of assets that have been designated as pension plan asset or fund asset by law, or a contract governing the establishment operation of the funds. These assets must be solely used to finance the pension plan benefits or end of the service benefit in the case of the Social Security Fund. So if these conditions are met, they can apply to FTA. Now, additionally to those conditions, the plan members or beneficiaries, they also must have a right or a contractual claim or entitlement to the assets or earning of the pension fund. This is only for the pension fund, but this does not apply for Social Security Fund. Then the fund must also have an auditor, and that auditor is required to confirm annually that the requirement of the fund to be exempt have been complied with, and they have to report to FTA if there's any breach of conditions. So these are, extra conditions for the private pension and social security fund. So now income that is received by the fund can only come from one of the following categories to be, so that exemption will be available. That is investment or deposits held for fulfilling the obligation of the fund, and the investment do not constitute a business operated by the fund. Underwriting commission charged for the purpose of the fund. rebates given by fund managers that are not considered compensation for services provided by the fund, or any other income earned through investments for the benefit of plan members or beneficiaries of the end of the service benefit in accordance with the defined investment policy. The next category of person, like we discussed, the 8th category is the juridical person owned by exempt person. We already discussed that a juridical person who is wholly owned or controlled by a government entity, government control entity, qualifying investment fund or pension fund or social security fund can apply for exemption if they are undertaking part or whole of the activity of the exempt person. They are holding assets or investing funds for the benefit of the exempt person, or activities that are ancillary to those carried out by the exempt person. So if they're meeting these conditions, they can be also exempt from corporate tax. Now, what happens, if there's a failure to meet the conditions? So where an exempt person fails to meet the relevant condition at any time during the tax period, then this person will be ceased to be considered an exempt person from the beginning of that tax period. But there are certain, exemptions, or, certain time when this date is not followed, like the beginning of the tax period. So we'll discuss those now. So for example, if an exempt person is liquidated or terminated, then they may continue to be deemed as an exempt person from the date its liquidation or the termination procedure start until the date it is completed, right? So they will be ceased to be treated as exempt person on the day following the date when it will be completed this process of liquidation or termination. But they need to provide a notification to FTA within 20 business days from the date of beginning this procedure to be able to, enjoy this later date. If the failure to meet the condition is of temporary nature and it can be rectified, then they can still be treated as exempt person. Now, if the failure to meet the condition should be due to a situation or an event which is beyond the exempt person's control, which they could not have predicted or prevented. The exempt person has to make an application to FTA and ask them to be continued to be treated as an exempt person within 20 business days from the day they fail to meet the condition. The exempt person has to rectify this failure within 20 business days from submission of this application. They also need to provide evidence to FTA where necessary to support that the appropriate procedures for monitoring compliance were in place. So they might be still be treated as an exempt person if approved by FTA, even though they had failed to meet the conditions for a temporary time due to conditions which are outside their control. Then if the exempt person will be ceased to be an exempt person starting from the day they fail to meet the conditions, in case it can be reasonably concluded that the main purpose or one of the main purpose of this failure is to obtain a corporate tax advantage. So then the date will shift not from the beginning of the tax period, but from the date that they fail to meet the conditions. So now, just to give you a background of that, if a person is exempt, then obviously they are, getting the advantage of that they do not have to pay corporate tax on those particular, you can say, like for example, government entities for their sovereign activities or for extractive natural, businesses. But there's some limitations also of an exempt person, apart from the advantages, which is that first of all, no business relief is available to them. So there's no group tax grouping, that can be done. No transfer of tax losses to any other members if they have other business, like we discussed. No business restructuring relief is available. No qualifying group relief is available. And like we discussed, that certain people do not have to file a tax return because they do not need to register for corporate tax. But the other people who do not get this automatic exemption, they need to file an annual declaration. So this is it for today, and we are available for any questions. If you have any questions regarding our webinar today, please feel free to email us. We are available to give you this answer. I don't think we have any questions for today.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.